Hi! In episode 9, we finish market intelligence. In the last episode, 5 independent engines voted on the direction of the futures market. Today we take the other half of this module, the options report. The same 5 engines, but a completely different dimension. And straight away, the disclaimer. Because in this episode, it matters more than in any other. You're going to see specific strategy configurations, specific levels, labels saying sell and buy. These are not orders. This is an algorithmic estimation and educational material. FOCSAL is not a registered investment advisor and doesn't tell you what to do. The model shows what a structure matching its reading of the market would look like. The decision stays with you, always. Let's start with something that's easy to get wrong. This report is not built on the options market alone. The same 5 engines work here as before. Let me remind you of each in one sentence. Structure reads price structure, highs, lows, breakouts. Indicators reads technical indicators and futures context, moving averages, trend strength, funding. Liquidity reads the order book, where the buy and sell walls sit. Smart money reads institutional positioning from the regulator's reports. And options reads the options market, dealer positioning, gamma flip, max pain. All 5 vote. The aggregator weights those votes and produces a shared interpretation, exactly as before. But there's one difference, and it's the one that makes this whole report. Look at the top. You pick an expiry date from a list. Tomorrow, next week, next month. For each one, you get a separate report. Why? Because every expiry is a different options market, different dealer positions, a different gamma flip, a different max pain. And here's the interesting part. 4 of the engines, structure, indicators, liquidity, institutions, don't see those dates. To them, there's just one market. Their votes stay the same, whichever expiry you pick. Only the 5th one changes, the options engine, and it's the one that tips the whole interpretation. That's why the posture on tomorrow's expiry can be completely different from the one a month out. That's not a contradiction. Those are simply 2 different markets. And one more thing, this report exists only for Bitcoin and Ethereum, because those are the only 2 where the options market is genuinely liquid. That's a deliberate call. Better to give no report than a weak one. The data, as always with options, comes from Deribit. The headline is the options posture interpretation for the selected expiry, directional bullish posture, bearish, or a market with no clear lean. Next to it, 3 shortcuts that set the context immediately. Model quality and stars. The higher it is, the more coherent the picture that came out of the vote, whether volatility is expensive or cheap, and where the gamma flip sits. The practical rule is the same as always, 1 or 2 stars. Treat the report as informational only. Below, the analytical synthesis, the whole interpretation in a few plain sentences. And under it, the structural reasoning, the specific points it rests on. Everything laid out, nothing hidden. Volatility state. 1 section, 1 question. Are options expensive right now or cheap? There are 2 numbers here, and you read them together. Implied volatility, how much movement the market expects. Realized volatility, how much movement actually happened over recent weeks. The model divides one by the other. A result above 1 means the market expects more than it's actually delivering. Options are expensive. Below 1, options are cheap. This is one of the most practical numbers in the entire module because it tells you not where the market is going, but how much you're paying to find out. And next to it, you also get the term structure and the skew. Which side protection is more expensive on? But if you take one thing from this section, take this. Expensive or cheap? Gamma regime summary. You know this from the options map episode, so let's be quick. Dealers hedge their positions. When they're in dampening mode, they break moves and price gets sticky. When they're in amplifying mode, they pour fuel on the fire. The model says outright which mode we're in, and the chart shows you where that force sits. Green bars above price, red bars below. That's a distribution you won't see on an ordinary chart. And the gamma flip, the border between the modes. One level that changes the character of the entire market. Below, the critical strike levels. The model spells them out with names that tell you exactly what they are. Hurdle, the level where dealer hedging will choke the move. Magnet, max pain. The place price tends to get drawn toward at expiry. 2 numbers straight onto your chart. And now the thing this report exists for. The model has already read everything. The votes of all 5 engines, the gamma regime, the volatility state, the levels. And now, it shows you what a strategy configuration matching that picture would look like. And this matters. The configuration doesn't come from the options market alone. It comes from the shared interpretation of all 5 engines. And the options market supplies the strikes and the dates. Let's stop here for a moment, because this has to be clear. This is not an order. This is not a recommendation, it's an illustration. The model says, if someone wanted to trade in line with this reading, this is what the structure would look like. Nothing more. What do you get? The configuration name and its lean, bullish or bearish. Next to it, the model's confidence, the payoff profile at expiry. This is the most important picture in this section. You can see 3 things at a glance: maximum profit, maximum loss, and the neutrality zone, the range where nothing happens. Notice that both edges are closed. This is a configuration with limited risk on both sides. The components, 2 legs. 1 sold, 1 bought. The bought one is there to cap the loss. Without it, the risk would be unlimited. The price magnetism zone, where the model expects price to land. And the most important one, the maximum loss boundary. 1 level. Breaching it means the regime has changed and the whole configuration stops making sense. Below that, you get the configuration breakdown conditions. The model spells out what invalidates it. Let's come back to the disclaimer from the start. The model does not tell you what to do. It shows a structure and tells you when that structure stops fitting the market. We'll come back to actually building strategies in the Strategy Lab episode. The model doesn't insist on one configuration. At the bottom, you get alternative strategies. The ones that came second and third, with a score, a horizon, and a conviction level. You see not just what the model picked, but how close it was. If second place scores almost as high as first, that tells you the market is ambiguous. And on the right, just like in the futures report, advanced details. The options surface, the skew, the flow, dealer positioning, futures context. All the raw data the model worked from. And again, next to every section, 3 fields. What the numbers mean, what supports the thesis, and what to avoid. At the bottom, an expandable section. How to interpret this report. Every concept explained, there, whenever you need it. And finally, back to where we started. Everything you saw today is an algorithmic estimation and educational material, not investment advice. The configurations, the levels, and the labels saying sell and buy are not orders. They describe a structure that fits the current reading of the market. The estimations come from probability calculations and widely accepted market relationships, and they can change at any moment. FOCSAL doesn't make decisions for you, it prepares you for them. And that's market intelligence complete. The same 5 engines, 2 reports. Futures asks, where's the market going? Options asks, what does that look like on a specific expiry, and what structure fits it? In the next episode, we take on smart money, the module that shows you what institutions are doing with their positions, not from rumors, from the official weekly reports of the regulator. Go to foxal.com, subscribe, and I'll see you in the next episode.